don't know what's going to happen. So you just back away from that stock and you say, you know what, I don't want to play until I understand the character of the stock. You can love a stock, love a company, the CEO, does not mean that it's going to work out.
Welcome everybody to Trader's Mind Chat, where we talk to professional traders from around the world to get into their mindsets, their beliefs, how they got to be where they're at. And today I have one of my first trading mentors on the show. Super blessed to have this guy on, Mike Webster from Investors Business Daily. I first met Mike at one of the seminars that Investors Business Daily has out.
What year was that, do you think?
When was that?
Yeah, what year do you think that was?
Oh, man, that must have been at least, I'd say 8 years ago.
Oh, okay. Okay. Was it maybe a chart school, market school? Or?
Yep, chart school. Yep, I did a chart school, and I was one of the first.
Hey, I dig your shirt, man.
Market school.
Is that a candlestick shirt you've got going on?
Yeah, it is.
That's,
yeah,
that's awesome, man. Dude, that's awesome. That rocks. Where'd you get that?
My friend made it for me. He's a
clothing designer. Dude, okay. Can I get one?
Yeah, absolutely.
Okay, double X. I'm on a diet. So.
Awesome,
cool, man.
Awesome. Yeah, I'll have it made up, and yeah, we'll chat after the show. I'll get one of these to you. Awesome. So for anybody that doesn't know Mike yet, has worked with IBD for over 20 years now. 23
this month, actually. Yeah.
Wow! Congratulations! Happy anniversary.
Thanks, man. It was on the 3rd. Appreciate it.
And yeah, well, works is the senior market strategist for IBD.
I'm the head market strategist.
Head market strategist.
Yeah.
Sorry. Yes.
Dude.
And a little bit nervous. Always whenever I'm talking to like one of my trading heroes.
While we have it, those people who watch IBD stock market today, they're filming it right over there. So we're in the middle of the newsroom.
Cool.
There's a bunch of people working hard trying to get the news out. And this is where we do IBD live, every morning here. So, I'm sure some people are probably familiar with that.
Awesome. So much to talk about. We got a load of stocks that people submitted beforehand. We have a lot of people that are joining us live, so we want to get to your questions as well. So already people are starting to put things into the chat. If you have questions for either of us, if you have stocks that you want to talk about, just load them into the chat. I will pop up Market Smith in a moment. Some of the questions that I wanted to just ask Mike.
Well, first of all, Michael, I just want to say I love the orange that you've got in your room. So I'm just going to call that the Market Smith orange. If people aren't familiar with Market Smith, it's goes by the color orange. The same thing from Bill's book, orange. So right on, man.
Absolutely, love that color. It's also my brand color too.
Oh, cool, awesome, good choice.
Yeah, absolutely. So yeah, Mike, well, first, thank you for being on the show. Really appreciate it. And well, one of the first things that I wanted to ask was about, when I first took the chart school courses, one of the things that you taught me early on was about, the character of the market and how you could see the character changes just in watching the price and volume, and you could kind of read almost like how a doctor would read an EKG. You could kind of tell the health of the market just based off of the price and volume and how things are shaping.
Of course, yeah, and that's Bill would always use the EKG reference. It's not something that I use just because out of respect for that was kind of his thing, but it is that it's just like a doctor reads an EKG. We read price and volume, and in every stock and it's more apparent in stocks than in the general market itself that they have a character. And so it's critical to understand when that character changes. So that's why we look at monthly charts, weekly charts, and daily charts. And many times the monthly chart will give you that big picture character, and that can last for years, even decades. And when it switches, it's critical to you see exactly when that change happens, and then all of a sudden it's this huge risk. So let's say you're in a stock that's been trending nicely, and it's not going straight up. Nothing goes straight up. So base building, and then all of a sudden it does something out of character, has a bad break. You don't know what's going to happen. You know, so something worse than normal. So you just back away from that stock and you say, you know what, I don't want to play until I understand the character of the stock. And the markets have the same thing. So you know, in a bull market, you'll have weak opens and close strong. In a bear market, it's the opposite. So not just looking, are you trending up, but also saying, you know, that's why I dig your candlestick chart or shirt, is because the candles are so critical on there, right? That where it closes within the day, like if you close higher than the open, that tells you one thing, and the reverse tells you something else. So it's always healthy to start off weak and end strong. The reverse, you know, not so good.
Here's a question, because you mentioned the shirt and the candlesticks. Do you look at candlesticks at all? Because like, well, we're going to go through the Market Smith.
Hell yeah, yeah. Bill used to give me, so the chart school, that was a seminar I did after I used to do them with Bill. And whenever we were on stage together, you know, so we'd start off the day, he'd talk, then I'd talk, then we'd talk together. And, you know, we would always get the question, the candlestick question, and he hates candlesticks. I mean, hates candlesticks, but I'd been using them from the late 90s. And I love them, and especially for intraday charts, I think they're very helpful. And on daily charts, really any time frame, but it's really the intraday and the daily that I use them most. And he would always say, well, I don't know, no one else uses them but Mike. He can talk about it. So I would talk about it. And it is critical because it gives you that sense. If you just look at a normal chart, and by the way, Market Smith doesn't have candlesticks at this point, but we're working on it. There's a lot of stuff in the background that we have to do to switch over, but you know, maybe later this year, maybe a little bit further, we're going to be getting them in there. It's going to be hot, and yeah, super cool. It's a big deal, big change. So anyways, you know, if someone's new, the candle, you know, the green candle on your shirt just means that the close was higher than the open. And the red is the reverse, and so you want to see green. You're not going to see it every day, but you know, it gives you more information than just the high, the low, and the close. And there are some charts out there that do to print the open on one side and the close on the other, but visually it takes more work to see that, at least for me.
Yeah, definitely. Like, and I only started using candlesticks myself very recently.
Really?
Like having gone
and you're already
through,
like hardcore wearing the shirt and everything, man.
Yeah, man.
Yeah, good for you.
Like I almost feel like there's a little bit of a different story that gets told when you're reading a candlestick versus when you're looking at just the bars.
Yeah, it's the full story, because you know, if you're watching it throughout the day, you get a sense for, are you fading at the end of the day? You know, in the bar itself too, the body of it, the distance, you know, you have the wicks, which are you know, from the wherever the high and where the close and the open are, and then you have the wicks, which are the little skinny thing that's where the high is and where the low is. And so the size of the body in relationship to prior ones, that's important, and it really tells you that picture of, you know, what was going on with the battle in the day. If you get a big bar with no wicks and it's green, that was telling you that the bulls had full, you know, they were fully in charge from the beginning of the day to the end of the day. They were in charge. And the opposite with a red. So I'm so excited that we're going to be bringing them in, but it's going to be a process. There's a ton of work. Oh, do you see Ed Carson right behind us? So that's Econ Ed. Many people will know him. So
Very
anyways,
cool.
yeah, he's been here for how many years? You been here? Almost 20. Yeah, he's a newbie. He's a newbie. Hey, Hat Man, you want to come over here? I want to say hi. This is my Harvard friend here. That's Dave.
How's it
going? Yeah. Thanks, man. That's Dave Chung. So he's been here forever. Yeah, and he wrote that one book on Investors Business Daily. So oh, now we got someone else over here. So this is Shreve Special, Ken. Say hey.
How's it going?
Yeah.
Was that?
Well, he's looking forward to hearing the conversation. He has no choice but to hear it, at least one side of it. So sorry, absolutely. You are in a live newsroom, so a lot of stuff.
No, this is great. I love the interaction and to be able to see the whole thing going on. Like very cool, very unique.
Yeah. So what's up? I'm sure you have a ton of questions from people.
Yeah, well, the chat is already exploding. Let's pop open MarketSmith and I'll share my screen. Let me see.
I see Dexcom reported after hours. Looks like it's up. That's what we've been talking about it on the show. The screen? Yep, I see it. Yeah, AMD. Cool.
Yep, so let's pop open Dexcom. Right? All right.
So, this was a bit of a risk, whenever I have a position in it, and what I just compliance reasons have to say that if we're going to talk about a stock, doesn't mean to buy it or sell it, just informational purposes. But we had a little contest on Twitter at the beginning of the year, and everyone picked what their stock was that they thought was going to have the biggest gain for the year, and mine was Dexcom. And obviously, they're the three big players in the diabetes or Tandem, Pod, and Dexcom. And so this one just came out with the earnings after the close. It looks like it's solid numbers, but looking at the chart there, the character. If you look from the March 18, June 18, that run up that it had going back a couple years. Do you see that nice run up that it had?
Starting from back here?
Yeah, exactly, starting there. Whenever I look at a chart, I want to see that it's been able to be a big winner before, and that's something I learned from Bill. And whenever I'd give him a chart, he'd start off with a monthly chart. In fact, let's go to the monthly real quick.
All right.
And you don't want a stock that's been a dog forever. You want, as I was talking about the character of the stock, you want one that's had a character before, that's been able to be a big mover. Also, looking at the big picture like this gives you a sense of what's been going on with it. Is this a stock that is kind of very steady and just slow, or is it one that's all over the place? And this one is one that's, well, what do you think, Michael?
Yeah, well, looking from the monthly chart, yeah, well, like it seems like one previously that had a fair deal of momentum. Like it looked like over here, like up 24%, 4% for the month.
Yeah, so a big move,
but
not steady, right?
Pretty steady.
Well, that run was steady, but then you had, if you look at that time frame, it was a bit of a mess. So what it tells you is that's what you're playing with. Like, let me just give you a different stock, and we'll circle back to this to give you a sense. Pull up TDG, Tom, David, George.
Yep.
Thanks, man.
Yeah, that's
Justin, hey, this is Justin, one of my oldest friends, Justin Nielsen.
Hey, Justin.
We've been doing stuff since '98 together, right? So he brought me a water. Thanks. So this is a completely different character, and steady. Maybe on any day or week, it's not going to be as fast as a Dexcom, but you did have this massive move, and so anyways, let's go back to Dexcom and just kind of have this picture in your mind. And yeah, completely different. They both had huge moves, but they did it in different ways. So that's the character. of it. So that's what you can expect when you're trading it, that it could be all over the place. So that goes into position sizing. You know, you're not going to maybe have as big of a position in something like this because it's just going to be a bit more volatile. But let's go to the daily
Very
chart.
interesting. And so do you always start on the monthly?
I like to, if I don't know the stock. Now, most stocks, I mean, I look at thousands of charts a day, so I
Right.
pretty much know them all. But if I was new to a stock, I would start with a monthly, and that's what most people should do, because it gives you a point of reference of the character that you started off with. But then to do any trading, you really have to look at the daily. So let's go over to that real quick.
All right.
So with this, what was nice is after that gap up on earnings, the last earnings that it had is a very
Yeah, that was
typical
great.
type of move and ran up, and you see the little flag there, the 28%.
Yep.
If people aren't familiar with it, I'm sure you know what it is, but some of your viewers might not know that that's pattern rec in there that I built, God, over a decade ago. And one of the bells and whistles that I put in there was if it goes up more than 20% within 3 weeks, then I put a flag with that number showing that, you know, it went up 28% within 3 weeks. That just goes back to an old bill rule that he came up with in the early 60s. He was trading a stock Certainty, which is one of his, you know,
Yes.
earliest trades. And he noticed that he mishandled it, and that's where all of our rules come from, pretty much, is you screw something up. But what his thought process was, if you screw it up, study it, and then learn from it. So it went up 28, or you know, the Certainty that went up real fast out of the base, and then he got shaken out of it. So he studied a bunch of them and said, you know what? If a stock goes up 20% right away, so within 3 weeks, I'm going to hold it for a longer period of time. And he came up with 8 weeks. So whenever we see that flag on there, we know that, okay, there's something special here. It does not mean that the stock is going to work out, but you treat it differently. So that's the first thing that I notice on this chart is, okay, it has that what we call power from pivot.
All right.
Then
Before we move
yeah.
on, because you mentioned the 8-week hold rule, and there's been a lot of questions around the 8-week hold rule
Sure.
from the New York City Investors Business Daily meetup that I helped organize. To
Oh, I didn't know that. That's great.
yeah, I've been with that group for a while now. Avi and Kevin Smith and I
Oh,
run that.
okay. Yeah. Okay. Awesome.
Yeah. And so with the 8-week hold rule, right? Like, so the idea is you hold for 8 weeks if you move 20% or more within the first 3 weeks. But you wouldn't just allow a stock to come all the way back to break even or stop you out. So it's kind of like not letting a big gain turn into a loss rule. And there's kind of like competing rules and ideas here. Like,
Yep.
how do you manage or reconcile that? Well, what are some ideas?
That's great, because we get that question all the time. And if you read Bill's book, in here, and you read it carefully, the exact thing that you mentioned, never let a big winner turn into a loser. So
Right.
that means, and I asked Bill years ago specifically, I'm like, well, what happens, you know, if you buy a stock and it goes up 20% in 3 weeks, and then it you know, you end up negative on it. And he's like, well, if you bought it right, that won't happen. Like, well, okay, maybe let's say it wasn't a perfect stock. You know, what do I do? And he's like, well, buy better stocks. So that didn't work out because I don't always buy, you know, perfect stocks. So reconciling the two, what I came up with is, okay, what did Bill say? He said that never let a big winner turn into a loser, and you hold the stock for 8 weeks. So you merge those and you just say, okay, if you're in it and it went up 20% within 3 weeks, and again, that rule is for if you bought it at the pivot, you know, so it's not really if you bought it 10% extended. So then what you do is you just say, you know, as it starts coming down and you know, now you're only up 2% or 3% on it, you don't want that big winner to turn into a loser, so you exit that position. You can always buy it back, you know that it had something special going on, but you're not going to let something that goes up 28% come in and take a 7% loss. That's just stupid.
Interesting.
In my opinion.
I like how you guys how you dealt with that. Like, so I'm curious, right? Like, so let's say this came back in, like, to me, for Dexcom, this seems like a clear area of support.
Yep.
Right, like right around the high of the gap. It looks like it tested support right around there, right around that $200 level.
Well, and the
Came in
200s is very important too.
199.50. What was
Well,
that?
the 200 level is
Yeah,
very
it's like a
important
big
too.
round number.
Big round numbers are important, and you've read Reminiscence of a Stock Operator, right? Like the best book ever written, right? That one.
Well, the second best to How to Make Money in Stocks.
Well, okay. Anyways, that was a big deal for Livermore, right? The round numbers, and so we pay a lot of attention to that. The fact that once it got through 200, having 200 be the floor, it was very important. And so it's nice that it went. And these floors, they're not solid, like the floor that we're standing on or sitting.
Right.
They can go underneath it just a little bit. So the fact that it was 199.52, that's as close to 200 as you can get, really.
Right.
So I'm sorry, I tend to interrupt. So what was the question?
This is great. I love the back and forth. Like, it makes for a great, like, going in deeper. So on this one, right? Like, so would it then make sense to say that, okay, rather than just being 2 or 3% above the pivot, like if we're using 178.45 as the pivot, right? And well, here's another question. Do you consider that to be the pivot of this? Because this is 23% consolidation, not really.
Well, look, it's tricky because whenever you have gaps in there, you can't buy it at 178, right? So the earliest you can buy it, it's already starting to become extended. So you have to kind of adjust everything when you're dealing with gap up. So yes, the pivot is 178.45. You can also say that the 162.14, you see that area of resistance there? Do you see the
oh yeah. Like that's
right
what
there?
I would say. It's like
You could call them both a pivot, like that is your area of resistance that it went over. And then your other more standard one was the 178.45, and that's the way Pattern Rec is going to pick it up. And so I guess to answer the questions that people might have is like, well, okay, well, can you buy that there or not? And yeah, you can. And I was buying it on that day, even though it's technically extended. You have the risk behind you of the earnings announcement. I mean, these days, the earnings announcements, have such a dramatic impact on the stocks. And that's simply because no one's sharing information. Back in the day, in the Livermore years, or even the 60s, 70s, 80s, there was a lot of inside stuff that was going on, shady stuff. And so people knew, and you could read it into the chart and see, was there buying going on there or supporting action? And so you wouldn't have these gaps. Now that the government came in and put down very logical regulations and make sure that no one's doing insider funny business anymore, 4 times a year you get this huge risk event where it's going to have a big gap up, it's going to have a big gap down. So in the end, the government was trying to do something of helping the little guy, but he really hurt them, because now you have to deal with these chasing a stock that's gapped up or dealing with a big gap down. So it's a bit of a mess, but it's an unintended consequence of someone trying to fix a problem.
Very interesting.
So with this one, look, it was solid action, came into the 200 level, bounced up, was nice and tight there, and you could have added to it right there, added to it there. Then as you went sideways,
it probably would have been a 3 weeks tight too.
Yeah, it might have been. Let's go to the weekly. I guess not, because if it was, it would. Yeah, you would see it.
Yeah,
You would see it
somewhere in there.
yeah.
Actually, that's where it was. No, probably just missed it.
Yeah. So the 3 weeks tight, that's just basically, if people don't know what it is, when Bill would always study stuff off of weekly charts, not as much monthly or dailies, although he would look at both of them. He grew up on weekly charts, and he would circle tight areas. And I had, access to all of his model books, and I'd go through and I'd see all these circles on these tight areas. And it was a really big deal to him. And the concept is, by the end of the week, you're almost unchanged for the week. So it's a sign of accumulation, and a sign of the big institutions are in there supporting a stock. It might not be ready to go higher yet, but it's not going down. So I just reverse engineered that. And when I was building the pattern rec, and just said, how can I program this in? And it's just simply, you start with the first week, let's call it closes at $100. Then if the next week closes within, $1.50 higher, so, 101.50 or whatever, 98.50, if it closes there, then that's 2 weeks tight. If we get another close within that same band, it's 3 weeks tight, and we show it on the chart of, we just, shade it in so you can see that it's 3 weeks tight or 4 weeks tight. And it gives you another chance to buy a stock off of that. As you're, sometimes you'll find an area of resistance. Sometimes you'll have to buy it as it goes into new high grounds. It really just depends on the situation.
It's really a fantastic tool to learn how to do all this and read it from the monthly and weekly and daily perspective. Even like I've gotten into day trading and short-term swing trading as well. What I learned from you and from Bill to on the intermediate term. Or what I would consider intermediate term, holding for several months, several weeks.
That's kind of the orthodox method of CanSlim is weeks to months.
That's a great way to put
but
it.
we do it all sorts of ways. So the swing trading, we have a product here. I'm not here to sell anything, but we have a product that I work with Justin and Chris on. It's called Swing Trader, and we're looking for swing trades. And then we also have a product where the team, the guys that you saw, plus another, we do the more orthodox thing, and that's called leaderboard. So it just depends on your time frame. And I have nothing against day trading. Day trading, we don't promote that here or encourage it, but I think it's fine if you have the right psychology makeup for it. You're willing to cut your losses quickly, and you're willing to do your homework. It got kind of a bad rap in the late 90s just because so many people were doing it and they didn't really know what they were doing, and you would just have this crazy market that they were getting away with it in. And then when 2000 came and the bubble burst, these people lost all their money, and this is just very, very sad because they just didn't really know what they're doing. But now these days, the people who still day trade, like yourself and others, you can be super successful with it. It's just a different mindset. There are advantages to it. So most day traders, they're not holding into an earnings event. They're going home at the end of the night, very light in the market, if at all. So you don't have overnight risk. But then you're not that TDG that we brought up on the monthly chart. You're never going to be in that either. So there's a trade-off, and it's just really whatever fits your personality, and you can do a blend of it. You can do some swing trading, some orthodox, intermediate style trading, maybe some very long-term trading. We're kind of getting into that around here too, and some day trading. Whatever works for you. Which one do you like better?
Which do I like? Well, if I had to pick my favorite, right? My bread and butter has been the intermediate term, like more of the orthodox style, because that's what I grew up with, so to speak. Learning from you guys, it's what worked for me so well while I was still at my day job, trying to make this stuff work as
What
a
did you used
part-time
to do?
trader. Before doing this full time, I was a fund manager, but nothing to do with stocks. I was
Okay.
managing research funds, grants, philanthropy
Oh, that's cool.
at a hospital.
Oh, that's very, very cool. Very cool.
Yeah, yeah. So, but this was my passion, and eventually, thanks to you guys, you specifically,
Thanks.
I learned how to incorporate so much of this stuff that that I was able to accumulate enough to finally leave the day job and go into being a full-time trader, trading coach, and building this business.
Well, that's freaking awesome because that's what everyone's dream is, right? You're starting off and you got this job that maybe you like, maybe you hate. Most people hate their jobs. I dig my job, so it's good. That's good. But
Mm.
I could see how, if I was, I don't know, a freaking librarian or something, I'd be pounding my head against the table all day, having to
Nothing
be
against the librarians and the.
no, but just having to be so quiet. I'm not the
Mm.
quietest person around. So, but no, I mean, librarians are super
Yes.
cool and they know everything, about everything. So how nice would that be? But, you're living the dream. So, more power to you. And if I played any part in that, that's great. Now, going back to the Dexcom, so it's gapping up tomorrow. So if you have a position like I have a position, I'll probably be, as the call goes on, as long as there's not something negative that happens, I'll probably be adding to it. If you don't have it, it would be a little bit of a risk here to buy it because you don't have a traditional base that it's really coming out of, and then so it's gapping up, and so without having any type of cost basis that's lower, it'd be pretty risky to buy it. We'll have to see how it opens
Mm.
tomorrow. But yeah, that one would be a tricky one to start with tomorrow, unless you're very tight if it doesn't work out.
So, what point do you add on a gap up? Are you buying the open? Or are you waiting until after it closes and adding the
Oh,
next day to see if it closes above the gap, or if
well,
the gap holds? Or...
kind of all of the above. So what I've
Okay.
found is when you try to make an all or nothing decision, that's typically
Mm.
the wrong way to approach it because sometimes you'll be completely right, other times you'll be completely wrong. You'll think that you don't really have a sense of what you're doing, and so just spreading it out. Let's put it this way. Let's make it easy. Let's say I have 100 shares in here and it's gapping up tomorrow. I'm going to figure out how much do I want to increase that to. Let's say it's by 10 to 15%. So instead of 100 shares, I want to have 115 shares. So another 15 shares I want to buy. I'm going to buy some at the open. Obviously, if your account is larger, you multiply that out. If your account is smaller, I'm just like using at 100 shares. It makes things easy to understand. So you have your 15 shares you want to buy. I buy a couple at the open, one or two, wait and see how it trades. I'm not going to be adding to it if it's going down, because sometimes you get these gap ups and then they start coming down, 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 and they keep going lower. And then you could end up having like an outside day where it would undercut the low, of the prior day. And that's a
Mm.
situation where you don't want to be adding more to something that's going against you. So I might add a little bit there, see if it firms up and moves higher, and I'll buy another share or two, and then by the end of the day, if you've got a nice close, I'm adding some there. Then typically what happens with a gap up is you'll have a gap up and it'll go up for 1 or 2 days, and then you'll pause for 3 days, 5 days, typically not a whole lot longer than 10 days. You'll have an area of resistance there, and then as it penetrates through that area, that's when you would hit it hard and buy the balance of it, because now it's telling you your expectation is that it's going to move a lot higher.
Mm.
Whereas the gap up it's a risk event, because you don't know, is it going to close the gap. A lot of people think all gaps are going to be closed. Well, look at the gap from last quarter, that never closed.
Yeah.
So that's how I would trade it. So in summary, split up your decisions, and then that way you're more likely to have some of them that are exactly right and some of them that aren't ideal. Same thing when you're exiting a stock. You don't have to sell the whole thing. You can sell a little bit here, a little bit there. And it helps psychologically too, because if you have a stock that's coming in on you, and you freeze up and you don't do anything, that builds up a psychological stress level that you're going to capitulate at the absolute bottom. So it's a lot easier just let some of the pressure off, some steam out of the thing by just selling some, and you can always buy shares back. Hope that made some sense.
That made a lot of sense. I want to dig a little bit more into that last part that you said, the psychological part. I'm trying to think of like there's so much gold in that last piece, especially, right? Like this whole game is psychology. Right?
Yep, right. And we should probably go to some other charts, because I think people they have they asked us for a ton of different different ones.
Psychology, like here's some psychology, right? A bit of euphoria.
So let's go to the monthly on this one to start off with. This is something that I'm trading kind of in a big way right now, and it's very, very tricky, and not for everyone to be trading. The character of this to me looks like a model book stock. This move that it's having now, it had that crazy big move originally in 2013, and you see it was kind of short-lived. It was 1, 2, 3, 4, 5, like 5 months were the bulk of it. And then it's been slopping around ever since, and I keep trading it, or was trading it during that time. Some were working, some weren't. And now with this one, let's go back to the daily. When we had that gap up of the first earnings, if you could go over, no, not that one, the other one, yeah. When that happened, I did something I rarely don't do, is, I started buying it in the after hours, and, just a little bit, because all of a sudden it was a game changer. And this is one that is such a battleground. It's like as bad as politics. People love it.
What do you mean that it was a game changer?
The gap up. Let's do a change date to that. Go to that.
Well, what is it? It's 10/24.
October. Yeah, 10/24. So hard to see now because it's so compressed. If this were any other stock, I wouldn't have, be buying it there. And I can't remember the last time that I bought, in after hours. But you see that you had all this overhead resistance. That's the stuff on the left side, from the 379 on down. That's a mess. And you normally wouldn't ever want to trade a stock with this overhead. And, why don't you explain what overhead is?
Sure. So overhead supply is all the people that are back here that they bought and that they're holding. And when they finally have the opportunity to exit the stock, then you would start to see selling at that point. That's why when we look at price history, and we look to the left and we see, what was the structure? And we see that, like over here, here's a point of resistance, and it's been trading below the 50-day. It's been trading below the 200-day. There's a lot of people that once it gets to that level, that might be very happy to finally say, hooray, I can get out at a better price than way down here. And that's what creates a lot of the overhead supply.
Perfect. That was exactly right, and right up your alley since you focus on the psychology. It's that, oh my God, they were underwater for so long. Now they've got their chance to get back to even. Just get me the hell out of this thing. So we normally don't trade stocks like that, but this one is one of those ones that people just love to short it, and it becomes this is just such a study in psychology. So you have the bulls like me that I bought every breakout over the last 5 years, and this is the one that worked. And then you had all those people that were shorting it, and for the most part, they got chopped up too, because it never really went down, continued to go down. It just went sideways back and forth. So this was a game changer in that you had a huge gap up on on the news of the earnings, and you can see that little cup with handle down there that starts at the 266.07
Oh, yeah,
area.
yeah.
So you've got the cup with handle.
Right.
Now you're back above that 200-day, and knowing the stock, the people, the players in it on the bull side and on the bear side, this was now going to be a huge battle. And so I started buying there. Now let's just fast forward maybe a month.
All right.
And those of you who are maybe not used to MarketSmith or any charting service, use the change date. It's what we do around here all the time, because you know that now that the stock is way up here, if you're looking at these days, they look so compressed. It's like, oh, it's no big deal, sitting through that mess. So this was now playing out like it looked like it was going to be the first pullback of an ascending base. Then you have this, this kind of brutal gap down, and I let some of my shares go on that day because it was breaking my expectations. I didn't sell the whole thing, but I'm like, okay, this isn't what I was expecting, and I knew that the bears were, in there, and we're going to want to push. Let's go forward another month on it. And this is a great just study of how big moves end up starting. So now you had your second pullback, an ascending base, or 3 pullbacks that you have where each pullback, the low is higher than the next one. So you had your first pullback. Now we had our second pullback down to 327. So I was, adding to it as it was going through here, but I wasn't adding super heavy because I thought that it was going to form an ascending base and have one more pullback.
Where were you adding? Were you adding like up
I was
here when it broke that high, or down here when it's like starting to?
Both. I've been adding, like, the way Bill has been able to be so successful in the market is he wasn't buying on one day. And there's a conversation, one of the last very important conversations I had with him before he retired was, just the difference of how he's been able to, have the decades from the 60s, every decade he'd have this stock that he would just play out and pyramid into, and why I was always struggling with it. And the thing that he told me is he was spreading out his trades in time. So he was always buying, at different levels, but not buying a ton. So that's why I said, if you have 100 shares at different levels, you could buy 1 or 2 shares. And over time, that ends up, accumulating to you really increasing the percentage is of your portfolio. But with that, you have enough time in between each ones. And that was the key thing that I was missing, was that he had down, is he was always managing his cushion that he had, the distance between where the price was now versus his cost basis. And there's no one better than him. What I would always do and screw it up is I would get so excited about it and I'd buy too much too fast, and then I'd have a nosebleed cost basis. It would come in, and knowing that I had too many shares, I'd have to exit the position. And so that's a recipe for messing up a good trade. So with this one, I was really diligent about trying to spread my buys over time. And anytime it was going through an area of resistance, I'd be buying it. I wasn't buying on weakness. I'd be buying on strength within here. Let's go out one more month.
Question before we move on, because so there's the cushion, right? And something that I see a lot of traders get kind of like struggling with this, and I struggle with this myself too. But I came up with my own solution. Like the idea of a cushion, right? So we have this profit, and is part of the reason why Bill is okay with having the cushion and then giving it back is because he has such a strong conviction in the idea, versus having this profit cushion and then feeling like, oh man, like I just gave up my gains and now they're evaporated. What do you think?
So
how do you trade?
Bill is the best stock picker, that's probably ever lived. And so but all the stocks that he bought didn't end up working out, and so if you figure the very, very best you know, maybe let's say the best in the world. Batting average is like 50 or 60%. So everyone else, all the rest of us is going to be under that. So, you know, the first thing is you can love a stock, love a company, CEO, what have you, does not mean that it's going to work out. So with the big plays that he made over his lifetime is really ones that he had a lot of fundamental conviction in. It wasn't just a chart. I mean, I trade charts all the time, you know, no big deal. I don't think there's anything wrong with that. But if you're going to trade something in a big way, and what I mean by that, by a significant portion of your portfolio, whether it's big, small, medium, what have you, it's all about the percent of your portfolio. If you're going to do that in a big way, then what you have to do is really have a lot of conviction in the story, in the fundamentals, the products, what have you. And it doesn't mean you're going to be right, but it's going to give you that ability to sit on those down days where, you know, it's like, you know, the world's coming to an end type of thing. If it's just a random chart that looked good, you're going to just puke it out. So the fundamental aspect of it is key. And but yeah, let's go out 1 month and we'll take a look at it.
All right.
And the reason why I'm doing this is what people should do with stocks is go back to the beginning of a move, and that's how you learn whether, you know, it's a stock from 100 years ago or it's a stock, you know, from last year. Is do this within MarketSmith and just do the change date and go forward. Ask yourself, what would I do, you know, with those shares? So on that big day, you know, so you had the 361.20 when it broke that resistance. You know, I thought that it was going to go up a little bit and then form an ascending base, or finish the ascending base, so come back down one more time. So that was in mid-December. But when it didn't, I said, oh man, this is something really special. This isn't forming an ascending base, and I need to get bigger in this. So I was just buying each one of those days. This is from memory. I hope I have it all right, but I was buying each one of those days, but just a little bit each time. Then on that upside reversal where it came back into 400, I thought it was going to come in further. And then when it turned back up, an upside reversal is when you shake out below and then you close up in the upper party range. That's when I hit it hard, because now my expectation was it was going to go up. I didn't think it was going to go up this much so quickly, but that's how you trade a stock. You don't just buy it once, although that is a strategy. You know, but you massage your positions, and so, you know, there were times where I'd sell some, you know, if I got a little ahead of myself and some of my other stocks weren't working, I'd back away. And that's just how I, you know, saw Bill operate, you know, over the years. Is, you know, he would just be, you know, what we call force feeding. You know, you take your best idea and you sell off your worst ones, and you keep trying to funnel more and more money into it. Why don't we go out another month, or just, yeah, I guess to the current. Have you been trading this one?
What was that?
Have you been trading this one?
Oh yeah, that for me, this has been such a fantastic day trading vehicle, right?
Okay.
And so, kind of to circle back to part of the conversation from before, like having the knowledge of like how stocks move historically, and understanding how bases form and what euphoria looks like, and what these parabolic moves are, and how they form, and everything that we've already discussed, then being able to take like, okay, like it's doing this here, where is support, where, like, well, what's the bias, and then going down into an intraday chart, like, and I'm looking at like a 5-minute chart or a 1-minute chart, and then being like, all right, on this day, like we're gapping up, it's coming down into support, great, like how can I then play this based off of both the higher time frames? Oh, it's pulling down into a support on a weekly level, this should be an area where it'll bounce, okay, great. And then all of a sudden, you know, you're up 20% on a day, and your risk was a couple of bucks on a stock that's 800. It makes for great day trading opportunities, especially, and I'm day trading options with this.
Well, there's all sorts of ways to trade it. And if
Yeah.
you're trading, day trading, then you want things to have big moves. You know, this obviously has big moves because then you have more opportunity. I'm trying to do a little something different with this. Let's go out to the weekly real quick, and I'll share that with you and why I'm treating this one differently. So as this is moving out, and really through the, when this run started, as it was going through the 360 level, and it's really just going faster than anything I've seen in a long time. You have to ask yourself, how do these typically play out? Is this a model book stock? So if you think it is, model book stocks end up having long moves. I mean, we have a few that are short, but most of them you're talking 6 months is short. You're talking, 9 months is short, but they're typically a year or longer. So with that was the backdrop for not selling on this run up. Although, I totally see, how you're trading around it. But with this, I was just trying to work on my cushion and make sure that I could stomach a normal pullback. And so I haven't been selling. In fact, let's go back to the daily real quick. And it's really just out of that time element, because this is clearly a climax action that we had, 2 weeks ago, where it's just, parabolic straight up. I mean, it was getting freaking ridiculous that, it was making those types of moves. And so it needed to settle down, but I didn't sell into that, even though I figured it was going to come back in, because what happens is if I would have sold out, I would have lost my nerve because of my lower cost basis. Wouldn't have been there then if I'm in there buying it for the first time back today. Now I've got an $800 cost basis, and that's completely different than having a much lower cost basis. And that's how I screwed up Taser back in 2003 by trying to be cute with it, and completely mess it up. And we could go to that in a minute. But with this, I just added a little bit before the gap up on earnings, just a tiny, tiny bit. And since then, so under 600, I hadn't done anything with it except for today. And I added to it now. I think it could probably come into 674-ish, which is around the 21-day moving average, based off it, which is that second line there, not the 10-day that it's at right now. And so I think that would be a logical area, which is kind of the low of that the day before the top. That would be normal action. So if that happens, I'll sell the shares that I bought today. But I hadn't been trading it or adding to it because I was looking at this as, okay, it's going to form a high tight flag, which is this rapid advance up and then holding in tight. We've got numbers around it. You don't really have to be concerned about it. As far as I'm concerned, it's more that concept of you rapid move up and not giving it back, and that's what it's forming. Typically needs a bit more time, like another week or two. So I hadn't planned on trading it, except for today. You have the negative news, or perceived negative news, of them doing an offering. So that drove the stock down and undercut the lows that hadn't been triggered for the last week, and that's not a good thing. You don't want, it was like a wedgie feeling, which each day for the last week, the lows were higher, so it wasn't shaking out people. If you follow that, every day people are saying, okay, if it undercuts yesterday's low, I'll be out, and it wasn't doing that. So today you got rid of those people, because now everyone is trading. This is all over TV. Everyone's talking Tesla. That's scary. That's not what you want to see. You wanted it to settle down, and it had some really tight action in there on a relative basis. So I added to it today. Maybe it just goes up from here. I prefer to go sideways, and even if it came into the 674-ish, I think it would be more constructive than just going straight up from here. That's how I'm looking at this one. Yes, it's someone would say, well, isn't that a climax top? No, it's not. It's climax action, almost picture perfect, euphoria, parabolic move. But going again back to the weekly chart, for a moment, it's just too soon in the move for it to be climax action. Typically, we look at the very earliest, 18 weeks out of a base. before you're even starting to look for a climax run.
Interesting. Even though that like this week from 673 is the low to 968 is the high, like that's still not.
It's climax action.
Like it's climactic action, but it's not the end because it's still so close.
Well, that's
like,
how I'm trading it. Now, it doesn't mean that I'm right. And if I'm wrong, I'm wrong.
No,
but let's do this real quick, because then I'll show you why I'm doing it. Pull up AAXN,
okay.
which used to be Taser, from and go to a monthly real quick.
Yep, I remember this one.
Yeah, you remember that move from 2003 and 4. Let's do a change date out to the top. Go to the top week in that. Yeah, out further.
April 30th?
You know, the other one, the other top. Out another month where, yeah, right there. Yeah. So let's change dates to that.
January 30th.
Yeah.
2005. This is such a useful feature.
Oh, yeah. And so I've been studying this one a lot because I completely mishandled it. I was all into the story on Taser, and, you know, if people don't remember it or weren't trading at the time, that's the, you know, instead of, you know, cops with a gun, they would have a Taser so they could subdue someone and not kill them. Let's go to the weekly. And you can see how this stock traded over a long period of time, right? It didn't, it wasn't over in 8 weeks or 9 weeks. It had an enormous run in time as well as percent. So I would suggest that your viewers go back and study this on a daily basis, and just look and see what happened. Now, you should have sold it in hindsight, you know, up on the prior top that you were originally showing, but I wanted people to see what can happen. They can come back, but it closed below the 10-week line. Can you mark the week that it closed? That's really when you would want to exit right there on that week, because then going back to the beginning of the conversation, that changed the character of it. That was the first break of your 10-week line of the entire run. So even though you wouldn't have top ticked it, and there was a climax, you know, top in there, if you just simply use that rule, let's go to that. Could you change the date to that week, and we'll go there. The decisive out one more week. Yeah, that week. Yeah, March
April 30th.
Or April 30th. Yeah. So this is a rule that it's probably the best and simplest rule, is waiting for a decisive break of your 10-week line and a close of it. And let's go to the daily chart.
Yeah.
So using that rule allows you to hold it this whole way. The downside is, look how far you are off your top.
Right. Yeah.
You know,
like the top was what, like around like 50 and change, and now you're selling it at 32.
Yeah. So there was climax top action in there when it was way up there. Let's go back to the weekly, because our scaling is not working on there. That you could have sold some. So again, circling back, that it doesn't have to be an all or nothing decision. You know, that you could sell some up there and then sell the rest. You know, your original shares that you bought, just say, okay, now it's finally closed below the low of or below the 10-week for the first time, and then you're just done with the trade. It's amazing how well that rule works. It's probably the best rule out there, but very hard to sit with, because you know, it was a $60-something stock, and now you're selling it in the 30 range. But you know, and there are splits in here. You know, that was a $2 stock. It was really $12 if you look at the splits. But anyways, sorry to get off on that tangent, but I think it's really worth people studying this one.
That's amazing. Thank you for that. And in all these tangents, like I've been scrolling through the chat too, like you're answering a lot of the questions that people already have in doing that. So it's fantastic. Like I think that we've touched on almost all the different types of questions that have come in one shape, form, or another, from position sizing to the psychology of all this.
I finally decided to open up the question thing, and I do see someone, Emilio, was asking if you're recording this and putting it somewhere. Are
Yeah.
you, and where would they view that?
Yeah, so the recording will be up in about in 1 to 2 weeks. It'll
Okay.
be both on my YouTube channel and also on the Traders Mind Chat Show podcast.
Okay,
Uh,
cool.
on iTunes and all the places where
Send
podcasts are.
me a tweet when it's out, and I'll send it out to everybody, anyone who missed it.
Awesome, thank you. I appreciate
Yeah.
that. And I'm pretty sure I set up this broadcast to be sent out to anybody that registered, so that like they could see the raw version of
Oh,
this
cool.
before it goes to the editor and she does her thing and makes it even better. But
Cool.
this is gold. There's so much gold in this. I can't wait to listen to it again myself. Like I'm learning tons of things.
You're too kind. So I see in the question from William, it's a top 5 things I learned from Bill or from Mr. O'Neill. You know, and I say it all the time, is the flexibility is the single most important thing that I learned from him. And I think I put a tweet on this the other day, or it was part of my weekly market summary that I do. That he, you know, we would talk every Sunday night for, like, I think it was about 15 years, and we go over stocks to put on our institutional list, and then we go over the general market. And he could be super bearish, let's say, on Sunday night, and you know, the world's coming to an end, blah blah blah. And I would be too. We pretty much saw the market the same way. And then 2 days later, something would shift in the market, and all of a sudden he'd be, you know, calling me up, hey, we got to put names on our buy list, you know, and he could switch gears, and he could switch gears back again, and that would drive people crazy, especially our sales folks, because they're talking to Fidelity and T Rowe and institutions, and they're like, wait, I thought you guys were bearish. Well, things have changed. And so he's very, very fluid with interpreting the market on a daily basis and adjusting accordingly. So that was probably the single most important thing.
Flexibility. All right.
Did we have some other stocks that people wanted to talk about?
Let's see. Let's scroll through it and find any. I'm curious too. Like we're all constantly evolving and learning different things. Well, what's one of the newest things that you've learned about trading or yourself, or how has your own strategy evolved?
Oh, well, pretty dramatically recently after doing a post analysis, you know, I realized that trying to trade the way others might want you to trade, or you might think you should trade, like some of those people out there that might think that they want to trade like you or me or Bill or anyone else. It doesn't work. You got to trade with your comfort level, and you know, if trading a certain way makes you nervous, or there's not enough action for you, there's too much action, or what have you, go to your comfort level, because whatever your comfort level is, that's where you're going to be successful. And I'm a very fluid trader. You know, I'm not rigid with position sizes or number of stocks that I own, and I'll change based off of what the market is giving me. And one method that I use, it just kind of, I was trying to put it on paper the other day, but it's just intuitive, is I look at 3 basic things. Is one, you know, to decide on a position size is, you know, how good is the stock? So, and I rate things on an A through C level. So, you know, is it an A plus stock fundamentally and technically, or is it a C stock? That's going to determine my position size. What's the condition of the market? You know, are we trading above the 21 day is kind of a key thing for me, or are we trading below it? Are we going back and forth? That will determine on a, you know, A to C level or A to F level, you know, another variable. And then personally, how am I doing? Am I hitting on all cylinders? That happens. Are you kind of, you know, in the middle that happens? Or is it that every stock that you buy just goes straight down? That happens. So when that happens, you want to trade much, much smaller. And it happens to everybody throughout your career. I've had great times, bad times, everything in between. And you just adjust your position sizing. So those three things, the stock you're trading, the general market, and how you're doing, should then, in my opinion, function, translate into the size of, that individual position. And so there's nothing wrong with, having a 0.5% position or a 1% position at different times. And there's nothing wrong with having a 30 or 40% position given or bigger. It just really depends on all those variables.
And I love it. I love it. There's so many great things that you said in there. The thing that popped out to me the most that I want to touch on too is the customization of the strategy to yourself. And this was a mistake that I see a lot of traders make. This is one that I made myself for years, and this is one that you helped me get over as well, which is the customization of the strategy. Like, well, when I first read How to Make Money in Stocks, I was like, okay, I'm going to do exactly what Bill said in this book, and I read it a dozen times, had like 50 different buy rules and 100 different sell rules, and it's all laid out here. I'm trying to do like the exact thing, and I'm driving myself nuts. And you don't want to be a clone of anybody. Like,
Yep.
you can't be a clone of anybody. Like, model success and then customize, make it your own. That's why every successful trader has done. Like, you don't need to reinvent the wheel, but you need to learn how to drive the car.
That's a perfect way to put it. And yeah, and trust me, I failed miserably trying to trade like other people, and it just does not work because, like I said, I'm very flexible and fast. So, if we get a follow through day, I want to push it hard right out the gate. Now, other people are, they want to buy a little slow, see if things are working, then add a little bit more. And there's nothing wrong with that if you're built that way. But if you're built that, hey, you want to push it hard, and if you're wrong, you're going to be quick to just get out of the way. Then, if you're trying to trade the other way, I was trying to trade, a slow way, and it just did not work out for me. And so again, just find whatever method works for you. Now, can you do me a favor, because I'm a bit OCD with my charts? Can you get rid of the auto fit on here? I think you go up to like the wrench, and then go down to price scale and go to standard at the bottom, near the price scale. Yeah, right there. Oh, that's so much better. I can't. There's a long story, dude. It's like a half an hour long. I'll spare you on that. But yeah, that chart looks so much better now.
All right. So yeah,
So
this is
never
one that
ever
Kevin,
turn that. Never ever under any circumstance turn that other button back on. Okay.
Got it.
Okay. We should just
All right.
remove it.
So yeah, Kevin wanted to ask your opinion about Zoom.
Sure. Well, I've got a little position in this right now. One of the reasons is it's a great product, is what you're using, but we use it every day. We've got a thing here at IBD called IBD Live. It's something new we started. It was Chris Gessel, who's the chief dude around here, coolest guy. Hopefully he'll walk by at some point, and I'll have him say hi. But nicest guy in the world, super smart, and he came up with this idea of, hey, people have a hard time with their product placement, Dave. Nice. Yes, yeah, and I know I'm being a little bit loud, but I can't help it. Yeah. Oh, newspaper. Thanks, Dave. So we've got this thing called IBD Live that we do in the morning. Dave's on there. He's known as the Hat Man because he always likes to wear hats. And so at like 6:20 our time until about 7:30, 7:40, we just go through charts. We do what we're doing now, and the point is we're using Zoom to do it. And it is a paid thing. But the point is, we're using it every day. It's not perfect. We have some technical issues with it here and there, but it's one of the best things out there when our technical people looked. So since I know the product, it's kind of the old Peter Lynch thing, or the Bill O'Neill would do it too, or of course Jim Cramer of, kind of trade what you know. If whatever you're using every day, you really want to look at those stocks. So if this wasn't something I used every day, I might not be trading it. But let's go over to the daily chart. I think it's a bit easier to see here. So we've got power coming. We have this overhead resistance, had its IPO base, broke out of it and failed and came down, kind of looked like crap for a while. Now it's moved up sharply on that gap up. Now it was just holding in here right below 90 essentially. And so I was buying it today because my expectation is that this is going to move higher. Now I'm going to have a tight stop on it, probably today's low. If we go below that, or certainly if we close below that, the chart just won't look right to me. So that's my exit strategy. And that's important. Whenever you go into a trade, you absolutely have to know where it is that you're going to cut your loss. You can always default to the 7 or 8% rule, or you can find a logical area on a chart. And so, today's low, if it were to go below that, I would have to exit because it would be breaking my expectations. But this is the highest close that we've had since this run up, and it gives you that expectation that we should be moving higher from here.
That was a really great sell rule and the way that you phrased it too. Like if it makes the chart look ugly, like that's right out. Like so, like thinking through like how can this happen? Like, well, what's my best case scenario? What's my worst case scenario? And well, what's most likely to happen? And then thinking like, all right, if it does X, then it's just not worth it for me. Like that's just like an expectation breaker. Get out of here and try something else like that. That's great. That's great.
Any other stocks that I know people had emailed, or not emailed, and tweeted, and a whole bunch of them, I kept a copy of them, but if you have some that you'd prefer to go over, let's do it.
Lynn said that she would like you to comment on Square, or for both of us to go through Square.
Well, why don't you do it first?
All right, let's zoom out a bit. Yeah, so let's see. So when I'm looking at and using MarketSmith, I like to start from monthly and then go down to weekly, daily, and go into the intraday charts too. And I like to look at it, think of it as like looking at the forest, the trees, and the leaves, and thinking of it as changing seasons. Right? Like nothing happens all at once. And if you're just zoomed in on, say, a daily chart and looking at nothing else, it would be kind of like being in the forest, picking up a brown leaf off the floor and saying, "Uh-oh, winter's here!" But then you look around and everything is green. Right?
Yeah, I've never heard it put that way. That's really cool, man.
Thank you. I appreciate that. Work hard on these analogies. But yeah, so it's been in this consolidation since 2018. Long sideways consolidation after this move up. So it's starting to come out of this, or looks like it's starting to get a little bit of power to come out of there. But let's go down to the weekly and see. Yeah, it's still like kind of in this sideways move. The thing that kind of troubles me a little bit, well, when I look at this, and it's a minor thing, is the relative strength kind of jumps out at me as being weak relative to the price action. Like the price action is moving sideways, getting close to breaking out over here, but it's been in this downtrend. Like I think that could catch up fast, so it wouldn't deter me from buying it, but it's just like one of those things that's not ideal, but there's a lot of other things to like about this too. Like I like the industry group rank 37. That's fantastic. I like the earnings and the sales. High double digits on both. That's amazing. The estimated earnings for this year, 21%. That's decent too. The earnings growth, the ROE is fantastic. The fund ownership is less than desirable since it's gone down the past 2 quarters.
Well, on that point, and I am trading this stock right now. I don't look at the number of, that is something that we used to look at a lot, of the number of funds increasing. I've gotten completely away from that. I don't even look at it, to tell you the truth. I look at the actual fund ownership in there. So if you go up to the tab up in your top right of your right panel, the owners, and then look at the show ownership, that's what I spend my time on. And that's the way Bill would look at things. Whenever I'd give him a stock, one of the first things he'd do is we have on our institutional side that's laid out a little bit differently, where we have all the sponsors in there, and whether they're adding to it or holding or it's a new position. I find that very, very helpful. And so you look and see, who's in there, that had, has had good performance. Why don't you rank it by the exactly, by the performance. And you want to see some, people in there that have, a good track record. That's very helpful. It is a big part of what we do. I can suggest that, look at the Fidelity Contra Fund, look at the T. Rowe New Horizon, if they're in the MFS growth, and those are kind of your key funds that that they tend to be in a lot of them. And I'm looking at it on a different thing right now. The MFS growth fund has been increasing their position. Looks like Contra had exited out of their position. Again, this is not in MarketSmith that it shows you, but on our institutional side of things. But having the MFS growth in there, and the fact that they're increasing, that is significant. So it's something that everyone should do as part of their routine. Find a couple funds that trade like us or have similar names, and just ask yourself, well, if none of them are in there, why do you want to trade in there? Because these guys and girls have all the resources. They actually have the companies coming to them and pitching them on their stories, and they have tons of analysts to dissect it. And if they're not in there, you don't want to be in there. But let's go back to the monthly chart real quick, and you can minimize this section.
Yeah, I also thought it interesting too on this one that it looks like about 25 or 30% of the fund ownerships were all A+. Like, as I was scrolling through this thing, it's just like keep going, keep going, keep going. Oh, it's still more A+. Okay.
Yeah, that's a really good observation on that. And so with this is a prior model book stock. It was one of the biggest moves in 2017 and 18. We were talking about it this morning on IBD Live about that's the fact that it's had that character before. It can do it again. So let's go over to the daily real quick. With this, you're right about the relative strength. That is certainly a problem with it, but it's also because it's been base building while the market's been going up. So of course the relative strength is going to look like crap, and it does. So it broke out of this cup with handle a couple weeks back, and I'd say that would be a very hard buy, because you had your gap down over on your left side, and that's not where you ideally want to buy a stock. But now it kind of went up and formed this little area of consolidation. It's just a couple weeks, and that's where I was buying some today as it was coming out of this. And you notice that the volume, although it's not heavy, it's the heaviest volume it's had in about a little bit over a week. So this is what I call a setup day, where it's set up to move higher the next day. So it's not a day that you go heavy, you're just buying some with the expectation that it moves higher. So my exit strategy on this one is today's low. If we end up going below that, it just means it's not ready yet, it needs some more time, and out the door I'll go. Plus, it's from a fundamental standpoint, I mean, that's a whole different thing. If this were a run-of-the-mill stock with a gap down on the left side, you know, I wouldn't even touch it, but it's because it's square, and I think most people understand that, you know, it's really kind of a game changer, and that general space is very hot. And you know, you've got a great CEO in there who, you know, it is a big deal, you know, having a quality CEO. So I'm giving it a shot, but you know, I know it's not orthodox. It's not an orthodox buy. You know, it's certainly not textbook. And if you want a textbook buy, just wait. And if it works out, it'll form another base, and you can buy it then. And at that point, the relative strength line should be better, a lot better.
Well, when it broke out over here too, like it just did so many things well, right? Like the sideways consolidation, like the clear point to break above resistance, getting above the high of that gap down over there. You're back above the 50 and the 200-day. You're starting to get that golden cross of like such a. But then you have support. Like I love getting into stocks that are breaking out, that have near-term support that's nice and close, and where like if it does roll over and it like if it falls through that floor, like you have a floor that's made out of cinder blocks, you don't have a floor that's made out of like wet cardboard, right?
Yeah,
all right, like if it's falling through there, like something's wrong.
Yeah.
But,
That's a really good way to put it. You know what, I do recall, because I have a list of all these questions that people had, and someone was asking about Shopify and resetting of bases, and I think we should tackle that real quick, because it was a really
I
good
appreciate
question.
you staying on so long. Like it's
no big deal. We have one of the guys, Terry Jones, who has been here since before the newspaper started. He's retiring next week, and so we're all sticking around for dinner for him. So it's that's not for several hours. So yeah, everyone's sticking around. It's a big deal. I mean, you know, spending, you know, more than 30 years at a firm. He's super smart guy. Let's look at this, and let's maximize the chart, and let's look at the weekly on it. This is one that I'm not in, and I wish I was in. Yes, thank you. Yeah. All right. So the question was, you know, the resetting of the bases. And so if people don't, maybe they're new, the whole base count thing is you have a base, you run up, you know, 20% or more, you have a second stage base, you break out of that, you run up another 20% or more, you have a third stage base, and so on. The concept is when you have a fourth or a fifth or, you know, a later stage base, it's more failure prone, because it's becoming more obvious, people haven't been shaken out of it. And so they're, you know, theoretically more likely to fail. So that's why if you hover your mouse underneath that base, there, yeah, so it's the sixth base, the eighth in count. I won't get into that. That's a whole different thing, but it's similar. So it's a 6-stage base. So you would want to typically just be, you know, shy away from something like that, but really it reset its base count. So let's go to that last consolidation as Pattern Rec has it picked up. So I built Pattern, like I said, I built Pattern Rec, you know, years and years ago, and there were some, you know, it was really tricky, and it took me years and years, 7 days a week of doing it, and there's still things that I see in it that, you know, I want to make better, but I would say it's about 80% accurate to how I'm looking at it. And so with this one, let's do a change date to the end when it breaks out of that consolidation.
So right over here, like around,
yeah, right there.
30,
Yeah,
15?
To go through this concept, because I do think it's important.
15, well, what year was that?
Was that 19?
19.
Yeah, 19.
19.
Okay. And let's look at, so this is just being picked up as one big consolidation. And the reason why it's still a late stage base is because it never undercut the low of this. If it would have undercut the low of it, then it would have reset the base count. So let's go to the daily real quick. So really you can see in there that there was a cup with handle. It started at the 176.60. Up in the, no, over, yeah, right there. So that was your left side of your cup. and then go over to your 168.95.
Okay.
That was your where your handle formed. So that was your cup with handle. And since it never broke out, it's not being picked up as a cup with handle. It just broke down from there. And then if you travel down, see how it undercut the 130.60, which was the low to the left, where it was that was the low of that base. So at that point, I would look at this as that base is now being reset, and then you have this other kind of ugly structure that you call it really kind of a double bottom-ish base that formed during a bear market, if you recall that horrible bear market there. So the relative strength was actually decent or really good in this one because everything was falling apart, but it was wide and loose, meaning that the bars were all over the place. But relative to what was going on in the market, it was really under accumulation. So that's a long way of saying that let's go to the current day on this. That is actually a second stage base is where we're out of now because it reset over there, formed this base. So this is our second stage base is broken out of, and it's extended. It was extended before the earnings. Now it's way extended. So you have to let it settle down to give you an entry point.
Yeah, wow, amazing.
Well, did you have any last questions? Because I know probably most people are bored out of their mind by now.
Not me. I could go on all night, but
well, I think I'm bothering Ken over here. He's trying to. Are you doing the big picture today? Okay.
But yeah,
you've been he's been riveted. Really? Okay, I think I owe him like $5 or something for saying that.
You're a fascinating guy that explains things extremely well.
And then the hat man is over here just saying, Mike, shut up. And there's Justin over there. Justin, are you still listening?
Guys.
Because he's listening in. Oh my God, what a nice guy.
Amazing. It's
great. He's going to go to a meeting now. That's going to be very riveting too. So well, if you have a last question, I'm happy to answer it.
Let's see. Yeah, you've already been like so super generous with your time. Like I don't want to take too much.
Problem.
Let's see. Any other last minute questions from you guys? This is the time to get it in. Bill Scott is saying to keep going if we can. This is always great to hear, everybody. Let's see. Netflix.
Yeah, we can look at that. What is that? Wait, hold on one second. Say again. Hey, is that the Bill Scott from Arizona? Ask him.
Oh yeah, is that the Bill Scott from Arizona?
Oh yes. See. Hey man, how's it going? Long time no see.
Mike's best sell rule. What's Mike's best sell rule?
Oh, without a doubt, the best sell rule. We did discuss it. Well, I'll go over all the most important ones. The most important one is a decisive break of your 10-week line. That's critical. And I really think of it as a hold rule. If you can be in a stock, and don't think of it as a sell rule, just say, okay, if, in fact, let's go back to Shopify real quick because it worked really well on that. So out of that base, and let's maximize the chart, out of that base that we were just talking about, that first stage base, and it ran up, look at your first decisive close below your 10-week line. That simple rule would have kept you in that entire run. So that's a holding rule. The selling rule, I've developed this thing where, let's say you buy it at a stock at a pivot. If it closes below the low of your pivot day, you're going to sell some. Let's call it a quarter to a third of your position. If it closes below the low of your prior day, so what I call day zero or your day before the pivot, sell another quarter to a half. And then of course, if you're down 7 or 8%, you have to sell the entire thing because that's just a risk management type of rule. So those are the best sell rules. Hey, what's your best sell rule, Ken? He's cheating because he just listened to what I said, and he said a weekly close below the 10-week line, 2% or more. Come on, stop stealing my stuff, Ken. All right. Well, we have too much fun around here, so we do this on IBD Live every day, and Ken's super smart. We call him Eagle Eye because he's so good at reading charts.
Mm.
So, what was the other question? Oh, Netflix. Yeah, let's take a look at that.
Netflix.
So, in fact, we talked about this this week for sure because Dave had brought this up, and I like it because I've always used Netflix. I've used it from, with the DVDs way back in the late 90s. I think the first year that they were out, I was using it. I've always had their service. So that's very, helpful when you're in a stock that you understand, just like the other ones we were talking about, like Zoom, or understanding something like Tesla or Square. So knowing the product and knowing that it's a quality product helps a lot. Now this chart kind of looks crappy because the RS line has been lagging dramatically. So that's a negative thing in there. You do have your 3 weeks tight all over the place if you can kind of hover to it, those blue areas. So when you see 3 weeks tight within a base, that's very constructive. We see that in a lot of our stocks that end up working out. Let's go to the monthly real quick to see the character. This has been a model book stock several times. So it has these rapid moves, and then it falls dramatically. So that's when you know that, and of course it was a much smaller company back then, but that can happen again. And of course there's all the competition that you've got now from everyone, including Disney and Apple. So that's a bit of a concern, but let's go to the daily chart to really analyze it. So this one, is being picked up as a cup with handle, but really the cup started at the 38.76. It was a cup with handle that broke out and failed and formed this larger, right there. That's really the start of this base. And, the handle breakout at the 338, that was fine. It shook out a bit, and then it had that powerful update on earnings. That's constructive. Right now, I'd call it just a little bit extended. I'm watching it because I want to trade it. I've tried it a couple times over the last month, but I don't have a lot of conviction in it because it has, from the fundamental standpoint, it's going to be really hard for them to increase their prices with the competition, with a Disney coming in there really cheap, as well as the other competitors out there that are relatively cheap. So it can't do that, which in the past it could have just increased it by $1 and it really tons of money would roll in. But if it gets close to 400 and forms some area of resistance and breaks above it, I'll buy it. But right now, I just wouldn't. Hope that helps.
Yeah. I'm kind of curious about, an idea just came to mind about earnings and sales and what's an orthodox can slim stock, right? Would you have, or did you trade BYND?
Yeah, I traded BYND. I have a token position in it right now, and this was the most unorthodox trade that I've done in probably my entire career. Well, one, I traded it on the way up, which was very orthodox. Let's go to the daily chart on this one. So that was out of the IPO base, and that move up there, I was trading it. And then, when it broke the 50-day, I don't think I was in it down there, but at that point, the character completely changed, and you see how the 50-day became a ceiling for it. So at first it becomes, support, and then it becomes a ceiling. It was a very, very clear ceiling. And when it broke above that, down at the bottom, I did something that I'd never, down at the bottom here in January, where it broke back above it. I did start buying it. I've never done this in my career before, but it really came out of a post analysis that I'd done where, you know, I was talking about a little bit of just trade your style. And you look, I've been a vegetarian since I was 19 years old, back before it wasn't cool to be a vegetarian. It's cool now. And I know how the whole millennial and Gen Zs are you know, behind this whole the vegan thing and the vegetarian thing, which I think is great personally. But this was really the only pure play there, and that's what all the hype was about. But just because, and I would never eat a Beyond Burger, because if you're a true vegetarian, you don't want something that tastes like a, but I won't get into that. So, you know, I have no desire for the thing, but I see that a lot of people who do eat meat, if that would have been around way back when, it would have been much easier for me to become a vegetarian if I had this option. So knowing how hard it is for most people, there's really, you know, a strong desire for it. So if there was anything else other than this, I never would have touched this, because it has all that overhead resistance. You know, it's a fad stock, all that stuff. But I bought it there. And then because I had my, you know, the Tesla that I was trading, I had to back away from most of the position because I couldn't have multiple super high octane stocks in my account, just because the volatility was going to be just too much and I was going to probably screw both of them up. So I brought this down to like a tiny nothing position. But if it breaks a downtrend that it's forming right now, from the top, from the downside reversal, could you draw a line? No, the red bar to the right of the 135.23. Yeah, that there, and then just draw it down, make a tangent. Yeah, exactly, right there. So if it were to break out from there, that's where I would be, you know, making it a bigger position again. But sometimes when you're trading a stock, it's really a product of what are the other stocks in your account, you know. So like Costco is one that I've been trading off and on because it's a nice, slow, pokey stock. I enjoy, you know, shopping at Costco. It's, you know, something that I can understand and everything. But it's not going to move a lot, which is good to have, because you can't have an account full of Teslas and Squares and Beyond Meats and stuff and still be able to sleep, you know. You know, since you're, you know, like the psychology aspect of it, how important that is, the balance, right?
Yeah, definitely. And for me, that, like, that's why I like to keep my accounts segregated. Right? Like, so the account that's being traded more of an orthodox kind of style is separate from the account that's being traded as a day trading style, and I like to do like both of those. Like, I see those as the extremes, and like I kind of like stepped a little bit away from it, shorter term swing trading, because the more orthodox style allows me to check a position at the end of the day, like quickly, like, oh, like, is a sell rule being hit? No, great, like, kind of move on. And the day trades, I could just be hyper focused for a very short period of time. I'm in, I'm out, great, done. And then it allows me to focus on the other parts of the business, building education, engaging with audience, all that, without thinking of like, oh, like, do I need to check a 2-hour chart because there's a sell rule down there? So yeah, and the way that I figured that out too, similar to how you did with your post analysis, like coming back and thinking not just what has worked for me from a trading perspective, but like, well, what's also going to fit my lifestyle and the outcomes that I'm looking to ultimately produce in my life and in my business, and well, with everything else that's going on.
Well, that makes a ton of sense. That makes a ton of sense. Well, thanks for having me, man. This was a lot of fun. I just looked down at the time and didn't realize it had been so long. So hopefully I didn't bore everyone to tears. But
no way, everybody stayed on. We actually saw more people come in. Like maybe they like people started inviting their friends. Like, hey, like you've got to listen to this guy Mike Webster. He's absolutely a genius. And
no, I wouldn't say that, but thank you. I appreciate that.
I really appreciate you coming on the show. Appreciate
and
your
I'm
time.
looking forward to my shirt, double XL.
Yes, absolutely.
Just send it. Yeah, just send it to
I've got it
the
written down. I'll
to
get your
IBD.
address and I'll send it over.
Yeah, it's yeah, just send it to the IBD, the care of me, and I don't think I'm officially allowed to ask for something, so I'm officially saying I don't want it. I don't want it.
All right.
Hey, thanks,
You will
Michael.
not, yeah, I will not be sending it.
Okay, we're good. All right,
Awesome.
take care, guys. Bye-bye.
Thanks so much. Thank you,
Sure.
everybody, for joining us.
Bye.